Happy Monday, Mark Chameleons. Hope everyone had a great weekend. How you doing, Dima?
Good morning, Will. Good morning, everybody. Thank you for joining us. How was your weekend, Will?
It's great. It's a little wet now, though, I must say. A little wet.
Yep. We're getting a lot of rain here too
Yeah, it's tough.
in Philadelphia.
Let me share my screen. We'll get started with the disclaimer. How's that?
Okay, sounds good. Everyone, thank you for joining us today. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, contact your registered investment advisor or call your broker. They should be able to help answer your questions and provide you with guidance. There's the disclaimer, everyone.
Great. Before we get started, D, we do have some new chameleons on the chat. For everyone on YouTube Live, you can ask questions on YouTube, the YouTube chat. Dima is always helpful in answering as many as we can. If we don't get to them because they're all good questions, please go to our forum on Market Chameleon. That's a great place also to ask questions. Dima, what do you got for us this morning? Anything good?
Yep. So we'll take a look at what's going on in the pre-market hours. I think I'll also just take a look at the stock screener, maybe filter out some ideas in the stock screener, see what's been going on in the last 2 weeks, if anything interesting is popping up. I did update one of the watch lists that I showed last week on clean energy, alternative energy. So I added some stocks to that list. So take a look at that and maybe do some, maybe a vertical spread screener, right at the end based on like some of the ideas that we found. So let's just get started with what's going on in the pre-market hours. These are stocks that are trading in the pre-market hours before the bell opens. We have the most active stocks, biggest percentage gainers and biggest percentage decliners. I'm going to filter out really quickly using this market cap to see what's going on in the higher market cap stocks. So using this filter, I'm going to say, show me stocks trading in pre-market hours that are at least $20 billion market cap or higher. So let's see anything going on there. So I see here just really quickly on the percentage gainers list, I got 54 on the percentage gainers list, 2 on the decliners list. So at least market breadth before the market opens looks more positive than negative. And of course, I think that they're talking about even increasing that stimulus, right? The coronavirus. So they're going to be pushing out even more money than potentially they were talking about, like over $2 trillion.
That's what they're saying, over $2 trillion. So
yeah, so that's going to be big. And I think that the plan is also to get it out really quickly. So before, like, I think in the past we've seen stimulus that were like more gradual coming in. This one, they just want to push it out really fast to give it that big shot in the arm. So that's at least now, that's definitely pushing. I think that kind of news is pushing the market higher. Top of the list made it Twitter. That's up 4.5%, which is pretty big move, I think, for Twitter to the upside. We got Snow, which is that's relatively new, right? Well, that one just
relatively new. I think they are in the server space, cloud.
All right. So I saw Twitter. I think they had an upgrade. So that's trading 4.5% higher in the pre-market. Twilio,
another software company. I think they're acquiring another software company in an all-cash deal, which is going to add to their revenue mix. Yeah,
that's up 4.5% in pre-market hours, and that's making a new 52-week high. Let me take a look at Apple up 3.4%.
Yeah, remember we have the 5G meeting tomorrow. Well, so that's what they're saying. The whispers are saying it's going to be all about the iPhone and how it's going to, with the 5G, the new 5G phone.
Right. So there's a lot of enthusiasm building up around that new 5G phones and around that technology. So we'll see what they say. That's coming tomorrow. Is that correct, Will?
That's the 13th. Yep, tomorrow.
So that's the top of the list. Let me just see anything interesting in the unfiltered list. I mean, I see Facebook up here 2.4%. Let's just take a look at the unfiltered list really quickly. So MDLY, low market cap stock, up 254 million. I think there's some news on it that they're selling either a portfolio or so there is some kind of catalyst news on there. I'm just looking at it really quickly from the headlines. Let me just skip to see if we find anything. What is this? LIZI, another low cap market stock, 122 million. Also some news on it, just scanning kind of the headlines, trying to figure out what's going on there. But looks like maybe they have like a government contract. So, I mean, I guess let's take a look at this one. So LIZI, Internet Content Information Systems, that's where they're in that industry. That stock closed at $2.65 on Friday. It was up 15% on Friday. Today, in the pre-market hours, trading $4.30. That's up 62% from Friday's close. 52-week range, we see $1.97 to $15.25. So still way below its 52-week high. In the pre-market, the VWAP is $4.16. The range is in the pre-market $2.65, $4.88 on trading 7.1 million shares in that pre-market. Here's what that chart looks like. So we see over here in the morning just started kind of going up, settled here. Longest VWAP bar right now, $4.22 to $4.39. And again, there is some news I see here that maybe they got awarded some government contracts. Didn't open it, just looking at the headlines. I'll let you guys read it and decide, but let's take a look at its history and see what it tended to do after a big move to the upside in the morning. So this is looking in this stock, LIZI, in the last 3 years, it's looking at the 12 largest gap moves at the opening bell. So we have here the dates of the opening gap move, the percentage move. Any notes here? There was a press release, big market gap. So if we take the average of the 12 largest gap moves, it's 5.9%, which is, nothing, 62% today. So way higher than what we've seen in history. After opening up, we see half the time that opening price was the high of the day, tended to go lower after the opening. The average move from the open to the high was 2.9%. The average move from the open to the low, negative 5.9%. 75% of the time from the open to the close of the day, it closed lower, 25% higher, for an average loss of negative 1.7%. But keep in mind, today's move, nothing like we've seen historically. You can see here, average 5.9 today, up 62%. And it looks like there is a catalyst behind that move. You should keep that in mind, read it, make sure, see if that gain is justified. But really quickly, we just looked at it from a price action analysis or historical return distribution after opening up in the morning. So let's close that. If you don't have any questions in the pre-market hours, well, I might go take a look at, we'll take a look at the watch list, some of the stocks that we added to the clean energy, and then I'm going to go to the stock screener.
Yeah, we also have a few earnings questions this morning, just an FYI.
Okay, so let's do that. I'll go really quickly to the watch list, then we'll hop to the earnings. So we mentioned last week, we're talking about the clean energy sector. We saw a lot of money flown into that solar space, clean energy. We see stocks kind of popping, holding their gains, and there is some legislation now. I think it's California's leading it, but it could spread where there are starting to change some of the rules, regulations, moving more towards clean energy. So people have been going into those stocks. We created a watch list over here, the alternative energy ETF. So some of these stocks, I'm going to show, let's do by price performance. So let's see in the last 2 weeks. So Here, TAN, that's the solar ETF, up 31%. This one I just added, iShares Global Clean Energy, that was up 27.4% in the last 2 weeks. PBW Invesco Clean Energy ETF up 25% in the last 2 weeks. This is the First Trust NASDAQ Clean Energy up 23.5% last 2 weeks. CNRG up 23.4%. PBD up 20.4%. ACES up 19.4%. So just added a couple more to that watch list. See, how these stocks will continue to perform, but they have been making, significant gains, holding on to those gains and adding to those gains in many cases. So, a lot of money flown into it. Most of these, from what I was looking at, it's they're more in the lower cap, stocks. So we'll take a look at that. The other thing I know, one thing, let me go to the stock screener. We're talking about lithium. So we've seen a lot of stocks in that space because of the creating batteries, right? The lithium batteries. So when you're using the stock screener, one way sometimes what they do, it gives it away in the name, right? So I just started looking at lithium here. Oops. So just typing in lithium, and I see that there is an ETF here, LIT. So that's a lithium and battery tech ETF. And I just took a look at it over here. I brought up a chart just to show you guys how it's been doing. And here's this LIT. What I did was I brought up a chart and compared it to SPY. So this is the 1-year chart. So you could see here in the blue, that's that LIT. The performance of LIT versus SPY, and right here since April, you've seen it just continuously go up and outperform. So if you're looking at that space, that lithium space, that's at least one ETF that I was able to find really quickly through that stock screener and LIT. So having said that, unless you have questions on any of these, like clean energy, lithium, what I might do is come back after the earnings. We'll take a look at the vertical spread screeners, and I'm going to screen for some of these clean energy trade ideas and vertical spreads.
Cool.
But if you don't have any questions, then I'll move on to earnings, because you said you did have some questions on that.
Yep.
All right. So let's take a look at what's coming up in the earnings front. I'm going under the upcoming earnings analysis. And let's switch to, I'm going to switch this tab. These are stocks expected to report earnings in the next 2 weeks. I'm going to filter out by stocks that on average trade 5,000 contracts per day or more. We want to see what the option markets are anticipating the earnings move in either direction. So we have here JP Morgan, that's coming up tomorrow, October 13th, before the market opens. Right now, the implied move, so this is looking at the front month straddle, nearest term straddle. It's implying a move of 4% in either direction, up or down. That compares to 4-quarter average actual move of 1.9% and a 12-quarter average move of 1.7%. Remember, in either direction, these are absolute terms. So that's 2.2% above the 4-quarter average, 2.3% above the 12-quarter average. The high move in the last 4 quarters is 4.7%. DAL, let me see. That is that Delta? So that's Delta Airlines.
Yep.
That's also tomorrow before the market opens. As of close Friday, the straddle is implying a move of 6.9% in either direction. That compares to 4-quarter average actual move of 2.5% and a 12-quarter average move of 2.2%. So you see that's 4.4% above the 4-quarter average, 4.7% above the 12-quarter average. The high move in the last 12 quarters was 4.8% in Delta. And we see in the average implied move actually in the last 4 quarters heading into earnings was 6.7%. J&J, that's tomorrow before the market opens as well. That straddles implied move of 2.5% in either direction, compares to a 4-quarter average move of 1.9% and a 12-quarter average move of 2.1%. And the high move on that in the last 12 quarters, 4.5% in J&J. Citigroup, implied move also tomorrow before market opens, implied move as of Friday's close, 4.8% in either direction. That compares to a 12-quarter average move of 3.1% and a 12-quarter average move of 2.2%, with a high move of 5.6% in the last 12 quarters. So that's really quickly some of the stocks expected tomorrow before the market opens. Did you have a specific one?
Well, that was it. J&J, JP Morgan, you hit kind of on them all.
Okay, right. So that's what's coming up in the morning. I'm going to take a look. Actually, let's just as an example, we'll take a look at one of the stocks. Let's take a look at JP Morgan. And I'm just going to look at it from a historical perspective, what tended to happen in JP Morgan. So we see here that these are the last 12 moves, what was anticipated. So these blue bars, this is the anticipated move up or down in either direction. So the straddles, predicts just the magnitude of the move. And this bar in the green, that's what the actual move to the upside. If it moved up, the red bar here, that's the actual move if it moved down, so to the downside. So the one I'm hovering over here, April 14th, the actual April 14th before market open, JP Morgan, they released earnings. By the end of the day, the actual move was down 2.7%. The implied move, according to the straddle, was up or down 7.5%. So you could see that move was more muted than the options were anticipating. Here, what this is telling us is that historically, in the last 12 quarters, 75% of the implied moves were overestimated the actual move. That on average, the implied move was 3.2% in either direction versus the actual move of 1.7%. So up or down 3.2%, that's the predicted move, implied move according to the straddle, versus actual move after releasing earnings, 1.7%. So you could see there, what's that, like 1.5% differential between implied and realized.
So you can hover over the upcoming earnings, and it shows you what it's implying right now, right?
Yeah. So right now, that's what I thought that we had it over here. Yeah. So this one right now, it's implying up or down 4%, and you could see these bars here. It just shows you how this implied, right? Because you could see how far up and down it goes compared to the previous 12 quarters. So you could see that this implied move 4%, it's less than the previous one, right? Heading into July 14th, the implied move was here. It was 6% versus 4%, and the implied move on April 14th was 7.5%. So now it's not anticipating as going into the earnings. That prediction is below what it was in the last two, but you could also go all the way back. So you could see here that these were unusual. April 14th, and we had that coronavirus.
Yeah, well, it's super visual. I mean, you can see March was the start of the coronavirus shutdown. So that first earnings cycle, I mean, they were implying a huge potential move.
Yeah, a lot of uncertainty.
Yeah,
right.
Very
yeah, exactly. So you see a lot of uncertainty here. So here's what it was in the past. All of a sudden, coronavirus hit, a lot of uncertainty. So that straddle was pricing in, very big move, 7.5%. Still turned out to be, just a 2.7% move below. Going into July 14th, still a lot of uncertainty, but not as much. A little bit more clarity I guess, or stimulus coming in. So that was implying a 6% move in either direction. Here we're at 4% right now. So even 4%, like we see that in the last 12 quarters, the average implied move was 3.2% going into earnings, and that includes these two. So we're still 4%, which is above that 12 quarter average. Again, we'll see what they say, how they're affected by the coronavirus. But it seems like now the market has been, we're almost at like what the 52-week high, I think, or starting to approach that. Let's see what the implied volatility tended to do in JP Morgan. So now we're going to look at options that expire 30 days. So these are options that are 30 days to maturity, not the front month, but the options that are a little bit further out that have more vega. So 30-day constant maturity. And we're going to take a look at what the implied volatility, how it compared the day before earnings to the day after earnings. So we see here that the average implied volatility crush day after earnings was 12%. So the day before earnings, the 30-day implied volatility averaged 25.7 versus the day after reporting earnings, the average implied volatility was 22.6. 5 days later, the average implied volatility was 21.9. So even continued a little bit lower. Let's take a look where we are right now. So today we didn't open yet. The market's still closed. As of Friday's close, that 30-day IV was 36.3. So that compares, 2 days before, that compares to an average of 27 in the last 12 quarters with a high of 56.4, low 16.2. And you see here the average implied volatility 1 day before 25.7, average implied volatility next day 22.6. But we are, sitting above that average, probably closer to the high. That's from the implied volatility perspective. Do you have any other ones on earnings? If not, I'll just keep moving.
Yeah, keep moving. We did have a question from our friend from Florida, Mike. He was asking, this is a spread question. You want to get to it or you want to do it later?
Yeah, what's the question?
He says he has a friend. He has a vertical put spread on. The price of the stock is below the strike price the day of expiration. Do you close the trade manually or does it self-close if you have, the two puts on, or the two, the spread, does the spread close if one of the options is in the money that year and the other is out of the money?
Well, first of all, the spread, nothing closes, or you'd have to close it. No, it doesn't. Nothing closes automatically. You would actually have to go and close it. But what happens at expiration is that your options that are in the money you'll get assigned on, right? You're going to get assigned on. The ones that are out of the money are going to expire worthless. So if your stock is in between strikes, right? If you don't close out of that spread, if you don't, manually close out of that spread, you're going to get assigned on one leg. The other one will expire worthless. So if you're in a put spread, if you're short a put, you're going to own that stock, right? You're going to get assigned on the put, and you're going to end up on Monday, you're going to just be long stock.
Yeah, you better make sure you have enough equity in your account to take delivery of the stock. There's actually, just so everyone knows, we've a new forum feature we added, and there's a great piece. And for those who don't know, Jake, he's a great contributor to the forum and just a very knowledgeable person. And he has a piece in there about, and a video attached about someone who the spread closed worthless, but there's 2 hours in between the close and when the options actually shut down, and someone exercised them an hour and 60 minutes after the market closed because I think it was either Amazon or Apple. It was down like, I don't know, $60 or $70 after hours. So you really have to be aware that you want to close your positions out during the day if you're worried about taking delivery of the stock.
Yeah, exactly. If you don't want to take delivery of the stock, then the best thing to do is, close it out. You can put a limit order in there or whatever, but just close out of it. If it's deep into money, so here I'll go. Let's create a visual here of what's going on, so kind of people get a view of what the question is. So the question is kind of like this, let's say the stock is 346.85, right? And let's say you are short, let's say you're short the 348 put, right? So this 348 put, and you're long the 345 put, right? This is I think what the question is, right? So you're short the 340, sorry, you're short the 348 put, that's in the money. Let's assume that the stock's closing right here. Well, the 348 put is in the money. So whoever owns that put is going to exercise it, and you're going to get assigned it, right? Because if you could sell the stock at 348 and buy back at 346.85, why wouldn't you do that? That's money left on the table. So so whoever's long it would exercise it. It'll get automatically exercised in the money. And if you're short it, you're going to get assigned it. So if you're getting assigned it, you bought that stock at this strike price, but you own the 345 put, that's worthless, right? They don't know so that one expired worthless. You get assigned. You're coming in on Monday. You're going to be long that stock. So that's how it would work. It doesn't automatically just close out for you. You'd have to actually sit there and close out. The other thing I think that Jake was talking about is when you have a spread, right? Some of the legs can get, wherever that stock closes, you'll get automatically assigned. So the OCC just looks at whatever options are in the money, they automatically, it's automatically assigned. And the ones that are worthless just expire worthless. But let's say that SPY, let's say here you had a different scenario. Let's say you were short the 346 put, right? 346 put, you're short that one, and you're long the 344 put. Hold on a second. 346 put, that's out of the money, and let's say you're long the 344 put, right? So this one, in this situation, the 346, if the stock's 346.85, the 346 put that you're short, theoretically it's worthless, right? It's out of the money, so it's worthless, and you're done. Your spread's out of the money. But the owner of that put can submit to exercise his strike up to let's say 2 hours, right?
It's 2 hours. Yep.
So let's say the market closed at 4 o'clock, or SPY, I think it's like 4:15. I forget when the official closes in this, but let's say it's closed. The price is 346.85, and you have until 6 o'clock to submit an exercise. So it won't get automatically exercised, but you can, it's your right to exercise that option. And let's say all of a sudden something at 5 o'clock, something really negative comes out, and after hours these stocks are lower. Let's say at 5 o'clock, whatever it is, like something with China or whatever, the market gets spooked, or it could be a specific stock, right? SEC is investigating. Something happens, and at 5 o'clock, you see that this stock is all of a sudden like $340, right? So if it's at 340, it's below that 346. So what can happen is, even though at the close, it's out of the money, after hours, you have up till 6 o'clock to exercise. It goes into money. You could still get assigned on it, right? So you could still come in Monday long, long stock, because you got assigned on it. And if that market opens there, at 340 or whatever, you own that stock. So you have that risk as well, right? That after hours, it could still move, And if you're close, you might still get assigned on it. Does that help?
Super helpful. Listen, you only got 5 minutes left. I know you were going to go and screen the entire market, but we did have a question from a chameleon who's on every morning, Pavel, and he was asking about TAN. If there are any bearish, I mean, if you could look for a bear credit call spread or something, that's what he was looking. I don't know if there are anything in the trade ideas in TAN. That was one of the alternative ETFs you were looking at, but you can screen them all if you want.
Well, let me go. I was going to go into bull put spreads.
All right.
Right. Just so, and you guys could go into bear spreads as well. I'm just going on a bull put spreads just to see, because it's been on an uptrend. But over here, what I could do is and this screener is just screening for bullish put spreads, vertical put spreads, selling a put and buying a put at a lower strike. And here I'm going to look for spreads that are by theory. Let's take a look at best by theoretical edge and 70% win rate. Right. So first I'm going to screen that. So this is screening everything. Right. And then so Apple, Microsoft, Alibaba, Facebook, and then I'm just going to screen for in my watch list the alternative energy ETFs. So I'm going to look at, so here, TAN, the October 16th, selling the 75 put, buying the 70 put. That's $1.60 credit now. We think it's worth 88 cents. That's a 21% edge with a historical win rate 79.5. ICLN, October 16th expiration. It's looking at the 22 put, selling the 22 put, buying the 20 put for 70 cents. We think it's worth 34 cents. That's a 28% edge with a 78.6% theoretical win rate. I could also change that to, let's look by best by win rate and 10% edge. So this will look at least 10% edge and oops. Right, so this is looking for all the stocks. I'm going to just go here to the alternative energy ETF. So here we have TAN. This is looking November 6th, selling the 65 put, buying the 60 put. So that's like more than $10 out of the money for 70 cents. We think it's worth theoretically 27 cents. That's a 10% edge with the historical win rate 94.6. ICLN, October 16th, selling the 21 put, buying the 19 put for 40 cents. We think it's worth theoretically 5 cents. That's a 22% theoretical edge with the historical win rate of 96.4. Again, that's using the bull put spread. If you're looking for the bear, you could just do it this way. Bear call spreads or bear put spreads. Bear call spreads, it would be just the opposite way. You could look at it, best by, let's say best by win rate plus 10% theoretical edge. And he was looking at, if you're just looking at TAN, let's see if something pops up. So nothing on a bear call spreads with TAN, meaning there's nothing there that had a positive theoretical edge and met the requirements here. But let me just clear it out really quickly. Next 30 days. So these are the TAN bear call spreads. So I see one here with a positive theoretical edge. October 16th, selling the 80 call, buying the 85 call, 55 cents for credit of 55 cents. We think it's worth 50 cents. That's a theoretical edge of 1.2%. Historical win rate 86.1. So that's really quickly bull put spread and bear call spread.
Super helpful, D. I think we only got a minute left. Any last parting thoughts for the chameleons out there?
I know. Well, have a great trading day. I was going to do some screens from the stock screener, but we'll leave that till tomorrow. And hopefully we'll see you guys in the morning. We're going to do a webinar today if people are interested in the call spread, not the call spread, sorry, just the calls. So we're looking at the buying the call screener. It's relatively new, so we'll go over a few more examples. We've been trying to do it in the morning, but we'll do one just in a webinar and concentrate on that. And that will be tonight at 6 o'clock. Well,
Perfect. I put the link out there for everyone who's joining today. Thanks for joining, Chameleon. I know we had a few new users on. So remember to give us a like. That's always a big deal. And subscribe to the YouTube channel if you haven't already. Have a great day, Chameleons. Thanks so much, Dimitri. Stay safe, everyone.
Thanks, everyone.